And so this is where the whole concept of restaking came to be on shared security, where the idea is, okay, instead of, as it traditionally is the case in proof of stake, to use your own token for security, in restaking, the idea is, why don't you use the security of one of the best assets in crypto, which is Ethereum, right? And so now, instead of it taking 33% or 51% of your stake tokens to attack your proof of stake chain, you now have to basically get 33% or 51% of staked Ethereum. And so for SatLayer, we take this concept one step further and say, well, what's the best asset in all of crypto, even more so than Ethereum, and that's Bitcoin, right? With what I think as of today, what 1.3, 1.4 trillion market cap, right? And also underneath it being proof of work. So that's for those unfamiliar like eigenlayer restaking, that's why restaking is important, is because overall security of the entire space is going to actually reduce over the next couple years because of all these chains launching and like fragmenting the security kind of budget, the security model for individual POS chains. So yeah, I guess let me pause there too. Like any other questions or anything so far? Cool. Oh,
So,
yeah,
one easy
Nicole.
question.
Yes.
These restaking nodes, should they also have another node of another blockchain to verify it, right? So it's like double. They also need to have each additional node for each additional blockchain. It helps to secure, right? Or protocol.
I'm not sure what you mean by nodes here. Like, could you maybe rephrase the question?
I
I
mean,
have a
if
sense,
you
but I want to make sure it's right.
Yeah, I mean, if you restake, for example, for to secure another application network, you also need this access to the data of different network, right? So you also need different nodes to set up, right? This is my question. Or how does it work?
Got it. Um, so so yeah, so the way restaking works is let me pause my screen share. Better uh better diagram here. Sorry, taking me a little second to find the right diagram. Okay. Not really finding the right diagram at the moment, but yeah, so basically with restaking, what the way it works is for a POS chain, instead of traditionally um you know using your own token as
Mhm.
how you secure it. You're using your own stake token as how you secure the network. You're saying I'm going to use Ethereum instead, right? And so the way it practically works is for EigenLayer, for example, and in our case, we have a set of like what we call operators, but essentially validators, right?
Yeah.
Kind of uh, validating these BBS ABSs or on our case Bitcoin validated services, which is going to be a different chain or an app, right, or an infrastructure, kind of like a bridge or something running on top of us. And so these operators are the ones validating for these BBSs, right, for the
Mm.
folks kind of consuming our security. So that's how it works. But in practice, yeah, like these operators are the traditional kind of like node operators.
Mhm. Okay, okay, thank you.
Yep. All right. I think next is Anchit.
Hey, thanks for coming here, Luke. I think this solved a big problem for me. So I'm actually building a decentralized insurance project in which people can stake their Bitcoin and Bitcoin LSTs and underwrite insurance to sort of other DeFi projects. So
Yeah.
after this call, I'd love to sort of speak more with your team. But I had a question: is like, what's the process to sort of onboard a project like myself as an ABS at SatLayer?
Great question. So right now it's very white glove. So I think just message me after this, right? I'll loop in the rest of the team. We will be launching our DevNet in the next 1 to 2 weeks with kind of documentation and everything. And so at that point it will be gradually more and more self-serve. But at the moment, yeah, I think just ping me after. We'll make a group chat, loop in the team, because our DevNet will be kind of like invite only on a rolling basis. And so would love to, learn more about what you're building and then get you building on our DevNet.
Perfect. Thanks so much, Luke.
Yeah, of course. And then I think Jacob is next.
Hey, hey, Luke, thank you. This is actually a pretty strong area of interest of mine. I've been trying to figure out ways to incorporate it within our project. So any kind of insight would be really helpful. What I'm usually really struggling with, and I've spoken to the Babylon team, Bima team, and a couple of like I think Lorenzo we talked to MP Stake,
Mhm.
just trying to gauge the risks around um, the these types of platforms and protocols, and
Yeah.
I've identified as basically like platform liquidity, liquidation risk, slashing risk, and kind of like overall market volatility that could impact peg.
Mhm.
How do you quantify that, and what kind of risk premiums are you applying when, especially when it comes to kind of the lending and borrowing markets? Our initial conversations with Bima was to create kind of like a restaking program where yield seekers will go through us, Bima, and we can use like the stable coins as form of like lend credit facility.
Mm.
And this is what we're working on, but I'm having trouble getting past some of some of those risks that we were identifying somewhere, the slashing risk, let's say it's like 1 to 3% annually, but the rest of them are, 15 to 20, 25%. So once you start applying that into like a risk adjusted return model for the yield seekers, and then get into kind of like the lending and borrowing, the cascading liquidation that could result from violent market movements kind of scares me a little bit.
Yeah.
Is there any advice on how you're considering that and what steps are taken to mitigate some of that?
Yeah. It's something we think a lot about. And so I think my super high level generalized advice is try to don't get too complex too quickly. Try to go
Mhm.
one step at a time, and also try to segregate and isolate as much as possible. Right. So our deposit app right now, so we take where is it? Like the kind of five LSTs that we show here, right? And we we made a conscious choice to actually segregate each of the vaults. And so we basically take, for example, we take UniBTC or like Lombard's LBTC, and then we'll mint a receipt token for each one, right? There is a trade-off here. It's like we fragment the kind of downstream liquidity, right? But what we are then protected is like, I think for those following, like, Bedrock's UniBTC had an exploit recently, and so it actually did depeg, right? But because of the isolated design here, it only kind of temporarily affected UniBTC, and every other asset was isolated from that depeg, right? But I think it's also taking taking the view of like, having been in crypto since 2017, like black swans in crypto are much more often than in other places. And so again, I think my advice is, one, don't go too complex too quickly. And I think two is, this is where insurance solutions get interesting, right? Because, a lot of times in crypto, if there is a weird edge case, like someone will find it and exploit it, right? Especially when there's, multiple kind of country, nation state level bad actors now, kind of perpetrating hacks and these exploits. And I think the other is, so it's kind of like have multiple layers of backstops when you can. And I think always build an extra buffer.
So more like capital reserves is what, or like over capital treasury.
Yeah. It's like you look at Athena and stuff, right? They just launched an insurance fund, right? And it's kind of like, okay, this design may seem sound, but then, you never know when someone may find the weird edge case that could actually break everything, or you have some sort of bug in your smart contract that, someone pushed, right? You can never be too safe here.
Yeah. I appreciate this. If it's possible to continue the conversation, I would love to get some more of your insight.
Yeah.
Get a little bit of a deeper dive on how we're trying to structure this.
Absolutely.
Sorry if you shared this already, but is there any chance you can share your Telegram handle or a way?
I'll just put it up here. And then, here you go for everybody.
Awesome. Thank you.
We might be able to
Greg,
fit in one if you have. Do you have time for one more question, Luke? Greg?
Yeah, absolutely.
Yep, thank you.
Hey, Luke, if you could go to the slide 5.
Slide 5, yes. Sorry. Slide 5, yes.
Yeah, so you had a Y case that the Bitcoin holdings are imploding because of the launch of the spot Bitcoin ETFs, that's fine. But anti holders of the Bitcoin ETFs are holding ETFs, and they cannot really do anything about it, they're just gaining the exposures. And the companies that are issuing the Bitcoin Cash ETFs are holding the Bitcoin in the custodians, so they cannot really stake it, or they cannot have the external kind of yield sources.
So that's where it gets interesting. So this is a slide that I skipped. So basically one of our investors is actually Franklin Templeton, right? One of the ETF issuers.
Right.
And also similarly, Van Eck has been making investments. BlackRock has actually been looking at deals, and I think they've made like maybe one or two. So, the point I didn't kind of get to there is, if you think about these TradFi guys, they naturally understand the concept of yield, of like staking and yield, right? And so they also naturally, in some ways, they understand restaking much more easily than like pure crypto natives that don't have a TradFi background. Because when you really simplify restaking, it has a lot of the same concepts as like insurance and like rehypothecation, right? It's one layer of rehypothecation essentially, because you're staking what's already staked, right, to secure something else. That's kind of like, the super ELI5 of restaking is like, okay, you're staking again, instead of secure your own, Ethereum's case, secure Ethereum, you're securing like some third like tertiary third-party project, right? And in our case, instead of, obviously you can't really use staking to secure Bitcoin, but instead of, securing for Babylon case, like another POS chain, we're securing like a infrastructure project or a dApp. And so for these ETF for these ETF issuers, right? Like, okay, if I was to put it very candidly, everyone's greedy, right? Once you kind of get exposure to Bitcoin, you're like, all right, well, how do I get a little bit of yield on top of Bitcoin that's like relatively safe? That's not like a DeFi borrow lend that, or it's like an option thing I get liquidated, right? Let's do staking, right? Once I do staking, how do I get a little bit more yield that's like similar and like relatively safe? Let's like restake. So that's really, I think, where people are coming from. And it's also, if you can see that uh, uh, like some of these ETF issuers in Europe are like offering now ETFs with like staking built in.
Oh, interesting. Thank you so much. That's
Yeah.
great.
Yeah. Albert, do I still have like 1 or 2 minutes, or should we wrap?
Well, it depends. Is our next speaker here, Rock?
No, I sent you a message on Discord, Albert. You still got some time, Luke.
Okay,
All right,
awesome.
all right, thanks.
Cool. Yeah, so I think real quick, like just another kind of like, going to the why of why you should build on SatLayer. We're backed by, I think, some of the best teams and minds in the space. And I think that is something that is quite important for a kind of project and ecosystem success, right? And Lucian, I'll get to you in 1 second. I just wanted to share, I think, also some advice for you guys from like both sides of the table, right? So this is both wearing my founder hat and investor hat. So first and foremost is find a co-founder / work wife, because building in crypto is actually, I feel like in some ways harder than building in any other space, like certainly harder than traditional tech, because things move so much faster. You're dealing with not just the tech side of things, but you're dealing with macro, you're dealing with like nation state level hackers and exploits, right? You're dealing with a community that's very vocal from day one, right? That can be very supportive, but honestly can also be very toxic when things go south. And so it is like mentally, emotionally, even physically, probably harder than like building in any other space. And so if you're gonna do it solo, like you need to have like literally nerves of steel. Or you find like a teammate, like literally basically a work wife. That's why I kind of wrote it and crossed it out, to really like have your back, because you are like, there are going to be moments where you doubt yourself. Like it's happened to me. It's happened to like every founder that, we've talked to, that I know. And so it's great to have someone that will kind of like cheer you on and prop you up even when you're doubting yourself, right? Second is really know yourself, as in know your own superpowers and your own weaknesses. And when you find a co-founder, find someone that complements you there, right? Because, if you kind of find someone that's like yourself, you may actually end up hating each other more likely than not, right? It's like if you marry a copy yourself, you probably can't stand them after a while. I think another is know the landscape, right? So I think BTC ecosystem, a lot of stuff is early in being built, but there are now a good number of teams building a lot of these things, right? So know your competitors, know what edge you have, right? And have a deep think about whether that's kind of something defensible. Which leads me to the next point, right? I think generally in crypto, there's 2 ways to win. You're either first in what you're doing, or you're a fast follower. And the keyword there is fast, right? And so, in our example, EigenLayer obviously is the first mover, right? They're the first to list, they're multi-billion FTV, right? And they're going to be around because they kind of created this whole thing and they kind of pioneered the entire restaking space. Our approach here is we're going to move fast, right? So, we basically did the bulk of our raise in like April and May, came out of stealth in August. And then we're launching DevNet kind of like 3 months, 4 months after that. And so, we generally try to move very fast. And then our mode is also BTC, just a better asset, kind of however you look at it, for restaking, right? For security. Crypto very much experiment and iterate because the meta constantly changes, right? So don't be afraid to try weird things, because it's kind of like until you get attention, nobody cares what you're trying, right? Try stupid shit. Try stuff you would be embarrassed about, because until the spotlight's on you, like no one's gonna give a shit. And that takes me to my last point is, as a builder, you need to make bets for the future. If you're building for the present, the most likely case is when you finish building it, because building will take time, right? When you finish building it, the meta could have changed. And so unless you're incredibly fast at shipping, you need to build for like 1 or 2 months out. And so that's where it's you kind of need to make bets on where the space is going. And you know, you're going to be right on some, you're going to be wrong on many others, right? But that's the name of the game. So yeah, I think, you know, just wanted to share some of my learnings there. And with that,